Ladies and gentlemen of the crypto space, we're live on a Tuesday, August 31st at 11:57 a.m. and I am off base today. I feel like crap. I'm just throwing that out there from the get-go. I'll see how long I could last on the stream this morning. Oof. Good morning, everyone. Oh my God, I don't feel good. All right, well, the title of the stream is Less is More. Income without work is the goal. And on days like today, when I don't want to work and I want to go just sit on the couch, I feel like shit. It reminds me that I'm heading in the right direction and I'm thinking the right way. I've had long-term conviction in some equity purchases years ago when I was young and had a very different mindset, but I had a very long-term time horizon. And they've been sitting for years without much uncertainty and much change to the portfolio structure. And when I entered the crypto space is really when I first experienced that frenzy of uncertainty, of anxiety, and a capacity when Ethereum was cheap. It was like $2 a transaction back in the day, and late 2019, early 2020. At 113 Gwei right now, you're going through 100, 200, $300 a transaction, which is why um, the markets are interested in Polygon and Solana and Avalanche and Phantom currently. Um, that's where all the frenzy is going on because it's fractions of a dollar. It's pennies often for a transaction fee. So you can enter a position, you can exit a position, you can engage a swap, which is how you destroy capital. And I say that from experience. It's how I destroyed capital. I would go through 3, 4, 5% slippages, going from one position to another. And, I can't argue with the fact that whatever I did got me to where I am. So I'm appreciative of that. Would I have done things differently? Well, folks often say to not regret how you got to where you got to. So maybe in some regards, I got here from luck. I definitely speculated, definitely took my fair share of gambles, buy low, sell high methodology. And I don't do that anymore. I don't. I don't have time for this shit. I want to do less work. I want to go to the couch and be able to come back to the computer in an hour and I've made like 100, $200. Now we're talking. And by having that realization, that's what I want. And knowing how to do it because of the experiences I've gone through, that's what I like to talk about. And anyone could do it. Now, it'll take time to save up that kind of capital, but you can. Honestly, if you want a history lesson in Noah, I stayed at home until I was 30, and I didn't move out of my house until I had about 120 chip in the bank account, just sitting there melting away into nothingness. I'm 38, so I was 30 in 2013 ish. Yeah, that sounds about right. So this is post GFC. Did a lot of pizza delivery. So I saved up that capital. Point being, spend less than you make, save your capital, but you can't save it in dollars. That was non-optimal. Uh, what I did not manage my capital optimally. You save future capital in the form of an asset now more so than ever. I mean, you should hear Raul. Listen to the Bankless podcast with Raul, the last one. I have it up here. I got to finish watching it. He's wonderful. Yeah, I'll put it in the stream. Watch this, guys. He's great. And if you watch him on Real Vision to get a sense of his macroeconomic theories, theses, and analyses, and all of the information that he posts in his reports, it's extraordinary. And he really gives you a big picture of financials. And, he says should have been long equities and long assets ever since '08 when the Fed intervened with their QE. Everything changed, and we're here more so than ever. we could talk about crypto, which is we'll end up talking about it. Phantom and Avalanche is some stuff I'm playing around with. Tiny positions, tiny positions. But the macro is important because I'm sure you all have anxiety. How long is it going to last? How long is the bull market going to last? When am I going to have to sell my stuff so I don't lose my money? Is it going to go up? When's it going to go down? Maybe I should buy this. Maybe I should sell that. How much of this should I have? Should I be staking here? What about impermanent loss? Should I be staking there? Now I got to swap an asset and experience a slippage of 2, 3, 4%. It doesn't work out optimally. Optimally, less is more. And that's something I've learned. I wish I learned it sooner rather than more recently. Larry likes the title. Let's get into the stream. Less is more. Income without work is the goal. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto. Non-custodial, DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. Larry, working now on something I do not enjoy. Even a little buffer would be great so I could pick a job I enjoy. So, buffer meaning, if you could replace 50% of your salary with a secondary source of income, a secondary revenue stream, you could quit. And now instead of having, 2 months worth of capital in a bank account, now you also have an income stream. So now you can think about what you want to do. You could take an extra couple of days. I'm tempted every now and then to reduce the amount of work I do because I want to do things that are on my mind. I want to program some Solidity contracts. I can do this stuff. I played around with it. I have some monetary policy ideas. I mean, there's countless contracts out there which I could reference that have been audited. They have been time tested, deployed to production. I got incredible source code references all over the place. And I have ideas of how to consume these time tested algorithms and structures and patterns. And do I get to do it? I don't. Maybe one day. Sergio, present. A pleasure. Encoder. Howdy, man. Bit is in the house. Good morning. Haven't seen you in a while. Hope everything's okay. Zach, Avalanche is super high transaction fees. Yeah, isn't it like 20 cents? It's getting pretty silly. $5. Okay, so, I mean, $5 compared to Ethereum is still ridiculous. So that is pretty high transaction fees relative to Polygon, which is still pennies, and relative to Phantom, which is also pennies. That's interesting. Igor, awesome stream about AVAX with Taiki. Yeah, that was a pretty good one. Messi's a cool guy. I like them both. They both handle memes much better than me. Their social media content as well as their YouTube stuff gets much more attention because they put in the effort with their graphics and iconography. And me, all I have is my mouth and my ideas, and we can do better. Encoder, I don't want to have a normal job. I am working now so that later I can have interest on my capital to have a salary. About 5 years and I'm out of the job market to enjoy life because life is short. Now, in theory, I feel the same way, and I expect in the coming years to not have to work, but I'll be doing the things I want to do. I want to program. I want to make apps. I want to make D apps. I want to write smart contracts. I want to continue with my social media activity, be it on Twitter or YouTube, and my participating in the Discord channels, and that's what I want to do. And then what I need to do where I am currently is I merely need to have enough time to prove that it's sustainable. So I could probably do that right about now. I just don't trust it that it's sustainable. So in the meantime, I persist with my historic daily activity of work and enterprise involvement, of which my enterprise involvement currently is quite satisfying. It's quite satisfied in many regards, frustrated in many, but satisfied in many. So, answer some questions. Daniel, can we get your thoughts on the Cosmos stacks like Sif Chain and Osmosis? So, Cosmos hits the China narrative, particularly vis-a-vis IrisNet and IRITA. business solutions, and the BSN is pushing it all, and that's vis-a-vis the China national government, Chinese national government. They're going digital, and they're going digital much more open and fast than the U.S. government, of which we don't hear shit. All we hear is we're going to regulate it and we're going to tax the shit out of people. And in China, yeah, it's totalitarian. The new legislation, the kids can only play games for 3 hours a week. So they do some serious stuff over there. Very different way of life. But so you can imagine they're going to be able to deploy blockchain solutions nationwide to over 1 billion people very quickly once they have knowledge that the technology is stable, reliable, dependable, so on and so forth. So, um, IRETA, Business Solutions, the BSN is going to push it on the population. That's IRETA's on the IrisNet blockchain, and the IrisNet blockchain is a Cosmos hub. And just as you said, Daniel, you'll see Iris on Osmosis, and I have my IrisNet LP positions, Amaris. I tried that too. I was at the Gravity Dex and Osmosis, which heck of an air job, by the way. So yeah, the hype and the hotness right now is with Avalanche and Phantom, but for me, Cosmos, the Cosmos hubs, not just Cosmos and Atom, but Polkadot as well. These are prime time, and they're in with the BSN. Um, so is Ethereum, and as much as uh, the general public and social media is hitting Avalanche and Phantom and Polygon, they like that because of their transaction fees are cheap, and that's what is talked about on Twitter. For me, it's the big macro narrative, which is why I really like to watch Raul and the other big um, high-level thinkers in the space, and China at a national level. Look at the founders of the BSN. I mean, seriously, when I saw who the founders of the BSN were, the founding members, it was just obvious to me what's going to play out. And that's where time horizon comes in. First off, now with osmosis and gravity decks, Emirus, it's lucrative because it's just churning capital, churning capital. You're capitalizing on transaction fees just constantly. But there's no obvious interoperability with the other chains, so you can't necessarily extract capital gains, take a salary cut, so on and so forth. Just auto compounding, auto compounding, but it hits the narrative. It needs the time horizon. For me, you give it 4 years, and these are going to be my biggest outperformers. Um, Atom, Iris, Kava, um, even Band Protocol, and obviously these decentralized exchanges. The reason um, the entire Cosmos Hub ecosystem is basically integrated with the BSN because of IrisNet. IrisNet has the Stargate, it has the IBC implementation, which means it's completely interoperable with all the other blockchains. As you can see here, it is just an asset. So if IrisNet is integrated into the BSN, everything is integrated into the BSN. Food for thought. Food for thought. Martin would love Aave to make a run, then Matic make a run higher. That'd be nice. Um, Aave's a big deal. Aave fits very much into the macro now. I mean, look, listen, Aave's going to launch on Avalanche, and it's going to suck in a huge amount of liquidity, and Curve as well. I mean, you need Curve and Aave. You need money markets and Forex for the foundational components of a financial system, and that's what Aave does. Aave and Curve launched on Polygon and did what it did. And we have that as precedent. So if Aave and Curve are going to launch on Avalanche, we know the amount of capital that's going to flow over. And that's the name of the game. Dylan just found the channel from Takey Stream. Love your stuff. No, it's a pleasure. I do the best I can. So sick right now. I feel like crap. Anyway, uh, Chris, good afternoon. Pleasure. Zach, Cosmos and Osmosis are on fire. Osmosis just approved funds to connect a bridge with Shapeshift. Shapeshift. Lovely. Wonderful. I mean, Shapeshift is old school, and they used to be centralized, and they obviously morphed to decentralized implementations. So this makes such sense. So obviously, it's not a short term time horizon as compared to like Joe, which ripped a bajillion% in a short period of time. I should have the chart open. Yeah, I mean the percentage appreciation from this since August 18th. That's extraordinary. People made absolute fortunes. You talk about 2.8 cents to $2.40. So not going to get that necessarily with the Cosmos hubs. You don't have the liquidity. You don't have the AMMs. You don't have the money markets. You have the DEX now. The DEXs just came out pretty much in the last month or two with Osmosis. And Gravity DEX was expected prior to Osmosis. And the narrative is a longer term time horizon. Took a position in Joe, little Joe position. Small position for my portfolio size, a fraction of a percent. And I took a position in Spooky Swap as well. I want to capitalize on the liquidity, on the transaction fees. If the platforms get hot, millions and billions of dollars are going to be flipping around in transactions. And I want to capitalize on those transaction fees. So on the hot DEX on Avalanche is Joe, Trader Joe. And he's cranking out 54%. So this number's been going up over the last day or so. I mean, this thing collapsed 40%. You got to remember, this is extremely volatile stuff. Date range, price range. So I deployed a bit of capital, and I have a very long time horizon with it. That's a massive dip, 60% dip in it in like a day. I don't. Who the hell would deploy them? Like someone out there deployed like 50% of their portfolio, bought the top, and is definitely crying right now. Just don't do that. Listen, if I threw 10 grand in here and it's making 50% compounded year after year, and if it appreciates 10x over the next year, another 10x, then it hits 50% drop in 2022, and another 10x in 2023, and before you know it, that 10 grand turns into $250,000 in 2024. So, and then to top it off, it's $250,000 cranking out like 25% of $250,000, and you're talking about like, was it 60, $70,000, 60, $65,000, 65. So off a 10 grand investment, and I just spitball numbers in 2024, if that's $65,000 a year, that's a heck of a 10 grand speculative bet that I just threw on the table. But that's that time horizon. You got to let stuff marinate, let it sit. Um, Let me miss some comments. Zach, Noah introduced me to Osmosis, such a great investment. Yeah, you know, I didn't buy any Osmosis. I've had Atom for a long time. I've had Atom since like $2, and Osmosis did an airdrop. If you haven't followed Twitter, there's been it's like 10 airdrops going on for Atom holders. Pretty crazy. Chris, my man. I do what I can. I hope I help. Dylan, well, what is it about BSN? Need to learn more about it. Well, go to it. Go to the BSN. You just go to BSN base, is it? BSN base. Go to the BSN base at BSN base. And they follow me because I know what they're doing and I like what they're doing. And I'm a little disappointed in our own government, and then go to their website and see their founding members and see what they're working on. And then, oh, the light bulb moment may go off. And maybe it's not Avalanche and Phantom and Polygon. Albeit Polygon hits the India narrative. My narratives are unchanged. They're very obvious observations. And over the coming years, Polygon could really set a big momentum and a target for innovation from young, hungry programmers in India, of which there's a lot of them. And they're going to target Polygon because it's cheap, it's homegrown, and there's honor in it because a bunch of Indian boys built it. Brilliant Indian boys. You don't build something like that unless you're brilliant. Find your big macro narratives. Glad to see more people in the stream lately. 34 people in the stream, 10 likes. We can do better. Like that up. Thumbs up. Dylan, insanely impressive founder, did cybersecurity at the Bank of England plus UK Feds. See, there's a lot of stuff that is not talked about on social media. And if you do a little bit of due diligence, it becomes extremely obvious. There's meat to it. And bam, you find the macro narrative. You know who does a good does good due diligence is Tyler Chico Crypto. I don't watch him much anymore. I don't. He's obviously he does good with makes a decent living from social media, which is nice, and think that's a very honorable thing, and he does well. I don't need the content. I like my stories, and I tell you guys my stories, the shit that I think to myself, and I don't want to necessarily be um, influenced by other people's stories. Like, um, oh my God, what's the hot asset? Baseline protocol and oh my God, what's the asset that he loves? It slips my mind. Bright. My God, I haven't even talked about that asset in a while. He loves Bright. Oh, it slips my mind. Anyway, now I'm just stumbling. I'll continue. Let's do some comments. Igor, UBT seems moving aggressively. Can it be the sign of corporate adoption getting closer? Um, oh, UBT, Unibright. Oh my God, there you go. So that's exact. That's is that a coincidence? UBT. That's very interesting, and I think he's really spot on about a lot of the macro narratives he talks about. He talks about was energy web chain, and that takes a macro mind to be able to see how that fits into the big picture. And clearly, that's a large time horizon. It takes years for those assets to play out, and even Unibright. But that's pretty good observations he has. Now, from my perspective, I think there's bigger macro plays, and I can't own everything I want to own. And I rather be concentrated in the things that pay me. So you don't get any return from Unibright. You don't get any return from. There is no way to allocate capital to baseline. That's a protocol for corporations. So he's got some great observations, but they're not. They don't fancy me. Food for thought. Food for thought, boys and girls. Uh, Jackson, devil's advocate concern. Current demand won't sufficiently fill the explosion of cheap block space on the horizon. Liquidity will be fractured, and it'll lead to a period of stagnation. Um, and the way I think about that is the pizza shop analogy. Oh, it's nice when you're making 10 grand a week. Everything's cushy. You get to save money, and then you get a recession and you're making 2 grand a week. What, are you going to sell your pizza shop? You're making money on a weekly basis. Is there anything more that you could possibly want? And if you want to grow the amount of money you make on a weekly basis, you save more money. And how do you do that? You work. Historically, people worked and put money in a bank account to save for retirement at 65,000 years old. Now you can put money into CVX CRV, and you're getting 50+% on your money every single second. You know, annualized to 50 something percent, but you're getting real time streaming income. That as you buy more, you're getting more income. So what you're doing is you're buying a revenue stream. So I look at a lot of the assets that I have as purchases. I purchased a business. I don't think of them as something necessarily something to liquidate. Um, Certainly not to liquidate for consumption purposes. Maybe to liquidate for purposes of reallocation to another revenue stream. That's the only way I think about that. Ren dark node revenue is still going down month over month. I've had 3 dark nodes since March of 2020 at 6 cents for a Ren. And my opinion is I'll check back in 4 years. How about that? It's just my opinion. That's what I'm going to do. You know why? Because I have them, and I am going to have them in 4 years, and I'm going to see what plays out. That is what I want, because I don't want 4 years to go by, and be like, I had those. So I'm going to have them. Let the volume go down. Let the revenue go down. Let the recession play out. Let the markets mature. Markets are fractured right now. There's no seamless interoperability cross chain, no transparent behind the scenes. You don't even know what chain you're operating on. At some point in the future, you're not even going to know what chain you're operating on. Daniel, when do you deploy capital into yield farms? Do you wait for the market to go down or just go in regardless and hold long? Yield farms, I don't take double volatile asset pair positions. I don't provide LP. I want transaction fees. CVX CRV obviously gives you your 3 curve, which is transaction fees, but it also gives you a share. It's literally the ultimate. It's the ultimate position. It gives you a share of the curve and the CVX, monetary policy incentivized emissions given to LP providers. It's got to be the best revenue share asset I could think of. But Spooky Swap and Joe, because Phantom and Avalanche have got some steam. This is a buyback algorithm. So 0.05% of fees for each transaction are used to buy back Joe on the open market. So that creates a constant buy pressure, a disinflation, if you will. And that's where the revenue is sourced from. So this is a sustainable source of revenue. And you can imagine if the transactions go 100x in 4 or 5 years, 1,000 times as much transactions. That's where I want to be. Same thing with XBO, which is cranking out 53%. They buy back using transaction fees. They buy back Boo on the open market. So these are small positions, boys and girls. As I said, speculatively, this will turn into a $250,000 position in 4 years, cranking out 30, 40, 50%, and I'm making an extra 50, 60 grand a year. And that's the size of the position I took, and very gross, broad speculation. The amount of capital deployed, I don't have to think about it much. If you got 100 grand in the crypto space and you're throwing around $1,000 or $2,000, you don't mind so much. You're not throwing around 50%. You're throwing around $50,000. That's taking excessive risk, and that you can make a lot of money with excessive risk. Could also destroy your portfolio. So this happens to be a position that's a little less than a percent of the portfolio. Joseph, do you think the advisor buyback of 10% fees is enough to support the price through a bear market? Unknown. An advisor is decent. I'm surprised how things played out with advisor. I'm more interested in Alchemist. I'm more interested in Abracadabra. Yeah, the advisor. Then basically what Uniswap should be doing and offering their own in-house um, yield optimized LP position managers. But Alchemist. Alchemix also is interesting. Not Visor. Doesn't interest me much. I'm interested in S Spell. I'm interested in FXS, Frac shares. For FXS is a deflationary asset. That's not even disinflationary. It's a full-on deflationary asset. Whereas Frax becomes over collateralized. They mint more Frax to restore the peg and use that to buy FXS on the open market and burn it. Not even buy it and distribute it to folks. They literally just destroy it. So it's a deflationary asset. That's fascinating. Dylan, I heard Messi talking about FDFI lagging. Do you think sushi falls into that category? Sushi is across 12 EVM compatible chains. Sushi and FTX are going to be absolute Goliaths. X sushi is a position I would like to have. I just am not going to cannibalize any of my current positions to have it. It just doesn't produce enough revenue currently. But that is a heck of a story of what sushi was and what it is now, and its relationship to FTX, and how big FTX will be over the coming decade. Notice how I talk in terms of 5 years and 10 years. That's the perspective to have. Sit on your capital. It is very different this time. I've been meaning to talk about that. Folks think about these cycles, 2017, 2018, and sure, we could have a very painful drawdown and bear market, but we know where things will be in 4 years. So now's the time to find your conviction. And if things are drawing down and you're down 50, 60, 70% on your money, you just don't look at it. We come back to it in 4 years, it's going to be up 200%. And sure, you could have sold before the depreciation and bought back at the bottom. That's sell high and buy low, sell high mentality and methodology. But that kind of requires work and effort. I got no time for work and effort. This is all about passive. I am a dividend investor. I want less work, less effort, more cash flow, more business, more pizza shop, damn it. I heard Messi talking about FDFI lag, and yeah, it's expensive, 126 Gwei. It's a couple $100 a transaction right now. We'll see what Arbitrum, and Optimism have to say about things, and we'll see how it plays out. I don't think Ethereum 2.0 is coming. I think it'll be Ethereum 1.5, where they upgrade the POS and focus on the base layer security and allow all this stuff that's been developed to keep developing instead of trying to get people to go back to Ethereum, you know, L1 2.0. I think that's just a waste of time. So let them focus on core protocol security and POS, and let all of these networks handle speed and so on and so forth with EVM transactions. Dylan, cool, hanging on to my position. Been doubting it a bit lately, watching other DeFi plays pump. Find your position. Your position has nothing to do necessarily with price appreciation, albeit price appreciation may be indicative or may be used to assess the validity of your thesis. So if something is not responding positively in price, it may discredit your thesis to some degree. But you have to have a time frame in mind. Look, Ren is a perfect example. I, I'm very comfortable with my Ren position. I got a great entry. It's just been riding for the last year and a half, and the revenue is up, the revenue is down. And when I say I'll check back in 4 years, boom, I say I will check back in 4 years. I'm not going to liquidate my positions. Take my time, and I know what it's going to be in 4 years. His legacy financials are screwed. Oh, an FXS or CVX CRV for noobs. Well, I can't help make that decision. Why? Because we cannot own everything we want to own. And I personally have a capacity to own both in a decent position size that I'm comfortable with. And that's a tough choice. I definitely empathize with that choice. FXS is a deflationary asset. Curve is a hyper disinflationary asset with significant deflationary pressures, with incentivized supply disruption as well as platform transaction fee revenue share, as well as governance rights. It's a disinflationary protocol, less emissions over time. Extraordinary protocol. I think it has the most profound monetary policy potential of the crypto space because of the amount of emissions. So it's a huge amount of emissions, which is money everywhere. It's literally it banks the entire crypto space. That's what they built. It's banking everything. It's responsible for all of Yearn's everything. But the disinflationary pressure and the disinflation of the reduction in emissions over time, but the incentivized supply disruption, as well as governance rights reality, there's a reason to not liquidate the asset. So quite extraordinary what was built there. Just found you and I'm loving the videos. Thank you. Can you explain the FXS and CVX for someone who has little experience in DeFi? Well, FracShares is an algorithmic, programmatic, partially collateralized stablecoin, and they're working on a CPI peg aside from their current peg implementation. It's a lot to understand. You can hear words and me talk about these things, but to gain a sense of what it is and how profound the technology is from an infrastructure and a financial system perspective with regard to the monetary policy of the asset as well as the function of fracs. Now you have to understand what's going on with stable coins and the sovereign CBDCs, central bank digital currencies. They might want to regulate, they're going to regulate USDC. GUSD is already heavily regulated, but they're going to want to KYC the crap out of everything. But FracShares, Frax, stablecoin, and if it's pegged to CPI, which speculatively inflation adjusted, fascinating, then there's no KYC. It's off the grid. And that's a big thing in the crypto space. It's not being outside the scope of regulation, because we don't need regulation. The system self-regulates. If something breaks or malfunction occurs or there's fraud, people don't use it anymore. And maybe they learn next time not to take excessive risk and gamble, and you wait for something to be time tested and mother approved. Time creates trust. Enough time and you can trust the protocol. Do you buy your curve outright since you said you don't LP? I have not put any capital into the crypto space in a long time. My capital in the crypto space has reached critical mass where it generates its own money. But bear in mind, you could do that at any portfolio size. If you're making 50% on your money, you got 100 grand in curve, you're making over 50 grand a year. I mean, that's just what it is. Let's take a look real quick. Let's wrap up the stream. I'll show you guys what's going on with Convex. Obviously, the emissions yield has been down a bit. I think my MetaMask is open. Oh, I'm on Phantom. Hello. What's revenue? 56%. 56%. So it's down a bit. I mean, come on. You're getting 10% on your money on dollars. That's meaningful. Obviously, the curve is extremely volatile. I mean, I've seen this number as low as 680 for a while, and now it's back up to 1. I was at 32%. I was down 32% on that capital, and now it's up 50%. It's at 6.8, and that's up 3 and change, 320. That's up 30 something percent. It's volatile, but I know where this is going to be in 4 years. I have my convictions. I'm going to let it sit, and this is the big play. I got the other plays too. I got my Ren. The 3 Ren Dark Nodes is nothing to sneeze at. It's like 160 grand right there. But it doesn't produce much revenue. But I know where it's going to be in 4 years. So expand your time horizon. And just remember that volatility doesn't necessarily equate to risk. And saving dollars in a bank account is a guaranteed loss. So that forces us to actually deploy capital to assets. Now we have to make choices, but don't go overboard. I'm going to end the stream on the title of the stream. Less is more. Income without work is the goal. Less is more. So if you're trading and you're indecisive and you have anxiety about your choice of assets, you're doing more. You're not doing less. Take your time. Find the assets that fit, that allow you to express the way you view the markets and where you think the markets will be in the coming 5 to 10 years. And those are the assets to purchase and to accumulate. And they'll go up and down in value. Time, uh, time provides trust. So clearly, these are very volatile. Boo's very volatile. Joe's very volatile. It's because they're on brand new protocols that are barely off the ground. I mean, they've been in development for quite a long time. Phantom's been around, Avalanche has been around, but they're picking up steam. And they went vertical. They went completely vertical. So now they're volatile. Joe down 55% yesterday. So Ethereum L1, that's going to be less volatile, which is quite interesting. Can you imagine we could say that at this point, that Ethereum L1 assets are less volatile than Polygon, Avalanche, and Phantom and Solana? There's a reason for that, though. More trust. More trust is less volatility. Stronger hands. Alan, uh, Goncalo, I'm going to end the stream here. You're very welcome. 33 people in the stream, 23 likes. We can do better. All right, maybe I'll feel better tomorrow. Thank you all for joining me. I hope it helps. Tuesday, August 31st, 12:39 p.m. As always, thank you all for joining. Tell everyone to subscribe. After party on Discord. I wish you all a wonderful day, and I will see you tomorrow.